92,000 jobs disappeared from the U.S. economy in the February labor report released at 8:30 a.m. this morning. And within 30 minutes, silver began reacting in ways that almost never happen during a normal trading morning. Moves larger than $1 in less than 30 minutes are rare in metals markets unless something significant has changed in the economic outlook. Let's get right into this. If you're new to this live stream, I host this live stream at 9 p.m. Eastern every day, and today I got some help from Offset Economics. I want to give them a shout out. Offset Economics. They're a great group of guys. They actually started their own YouTube channel recently, and they helped me with the research for today's topic. I left a link down below. Please click that link, check them out. I'm going to start this live stream with a quick clip from their video on this topic. So let's get into it.
The most important economic data of the week hit the market at 8:30 a.m., and silver is already trying to figure out what those numbers mean. Within the first 30 minutes after the release, markets typically begin reacting to 3 separate signals. In this video, I am going to show you what these signals are pointing to. This might play out for the price of silver. The first thing we are seeing is clear. This kind of reaction window does not normally shake silver this quickly unless the metal is already sitting in a fragile position after several volatile sessions. The dangerous window for silver is often the first 90 minutes after the data drops. The market is still trying to interpret what just came out at 8:30. Traders are comparing the new data against forecasts, previous months, and expectations for Federal Reserve policy. If the labor numbers appear stronger than expected, interest rate expectations can shift quickly. But if the data appears softer, traders may begin pricing in a weaker economy.
Again, that's Offset Economics. There's a link down below. Check them out. They've really helped me a lot, and they've helped with the data that I'm using for today's live stream. Now, in this live stream, I'm going to show you how the labor report instantly changed expectations about interest rates and the dollar. That is key for our price of silver. Next, I'm going to break down how that shift rippled through the silver market in less than 30 minutes. And stick with me all the way to the end, because I'm going to explain to you how a single economic report can trigger chain reactions across silver markets all at once. Almost nobody noticed this first 30 minutes of the report, because it really is important for us as silver stackers as we look at the spot price. It revealed more about the direction of silver than the rest of the trading day. And yes, we will get to the charts in a moment, and I'm going to break down what happened for the rest of the day. But I want you to lean into this part because it's really important. This labor report was released at 8:30, and this is one of the most powerful data signals that we get for the month in the financial system. The February report showed a decline of $92,000. Now, many forecasts expected modest growth of around 140,000 positions. That difference is roughly 232,000 jobs between expectation and reality. A difference of 232,000. And that forced traders to quickly reconsider the strength of the U.S. economy. Within roughly 10 minutes of this data release, U.S. Treasury yields began moving lower because investors started considering whether the Federal Reserve might adjust rates and their policy sooner than expected. And when interest rates expectations start to shift, precious metals often respond quickly because metals do not produce income like bonds or savings accounts, and the metals market starts to get nervous. When interest rates fall, the opportunity cost of holding silver decreases, and that can change investor behavior almost immediately. We've seen this time and again. Now, really keep this point top of mind, because a lot are missing this. The labor report, it doesn't just move silver directly. It moves the dollar first, and silver reacts to the dollar. Money goes where it's treated best, and if funds can get paid more by going into treasuries, that's where we're going. That's just how it works. And really, within approximately 25 minutes after the report, the US dollar index dropped 0.6 points, sliding from 105.2 to nearly 104.6. And when the dollar weakens even slightly, commodities priced in dollars often become more attractive to buyers outside of the United States. However, today the silver market showed something unusual. If you're new to this live stream, click that link in the description first. Don't miss out. Subscribe to this channel. I host this live stream daily at 9 p.m. Eastern on Pound of Gold. And today, I'm giving shout outs to my friends at Offset Economics. At the top of this live stream, I showed you a clip from their video. They're starting their own YouTube channel, and they helped me with the research for today's live stream. So I'm really appreciative of them. These guys are great. Check them out. The link is below. Check out their channel, Offset Economics. They're awesome. Now, again, today the silver market showed something unusual. Instead of rising immediately as the dollar weakened, silver initially dropped sharply. This type of response can occur when traders are worried that a weakening labor market might signal slower economic activity, which could, of course, reduce industrial demand for silver from electronics, from solar, from manufacturing. This is really critical because a 30-minute window having such an impact is something that really sends off alarms across and ripples across not just the silver market, because the market's not responding to just one number, but it's actually responding to the chain reaction that's caused by that number. I'll say that again. The silver market is not only responding to that one jobs number, it's responding to the chain reaction that is caused by it. Because a loss of 92,000 jobs immediately, of course, it raises concerns about economic momentum. And when economic momentum weakens, traders begin adjusting their expectations about growth, their expectations about where inflation is headed, about how central bank policy is going to move, and all at once. And that adjustment spreads across markets. It just ripples. Bond yields fall, currency values shift. Metals like silver experience rapid price moves like we experienced. And many assume that bad economic news always pushes precious metals higher. Wouldn't that be great? That would be so easy. But really, the relationship is much more complicated than that. Silver, of course, has two roles. It's a precious metal like gold, but it also functions as an industrial metal used in manufacturing, used in technology. Between 55 and 60% of global silver demand is tied to industry, right? That's why China is so desperate to get their hands on silver, because they want to be the top in solar, they want to be the top in EVs. That's the industrial demand. And really, that's the demand that's gotten us to this price point today. So when economic reports suggest slower growth, some traders begin worrying that demand for those industries might decline. Because if the economy is contracting, then industry is also contracting. And that concern can temporarily push silver prices lower, even if safe haven demand is going to increase later. In yesterday's live stream, we discussed this. Gold is not only staying strong, it's even bumped up as a response to geopolitical issues regarding the Middle East. Everyone is waiting for silver to do the same. Oh, if you're new to this live stream, hit that subscribe button. Don't miss it. I host this live stream daily on Pound of Gold at 9 p.m. Eastern. And today I'm giving a shout out to my friends at Offset Economics. They helped me with the research I'm using for today's live stream. They're great. I put a link down below. They just started their own YouTube channel. Check these guys out. They're awesome. I really learned a lot from them. I think you'll like it a lot. Now, if interest rates fall by even half a percentage point, the relative attractiveness of non-yielding assets like silver can increase substantially. This is because investors are comparing two options. They're deciding where to put their money. Where is money going to be treated best? Earning in interest bonds or holding metals? And they may consider that they have to reconsider, really, their strategy when bond returns are declining. During the first half hour of this report, futures markets that track interest rate expectations began adjusting probabilities almost immediately. Those probabilities for future Federal Reserve decisions. Those changes, they change quickly and they spread across currency markets and commodities. Now, this is the unusual behavior in the silver market during that first 30 minutes day, because it might signal that traders are trying to balance these two competing narratives at once. The weaker employment data raising fears about economic growth, real fears having serious impacts. And on the other side, slower economic growth increases the likelihood that central banks might eventually reduce interest rates. So when we get these data drops, like labor we got today, and really there's several times throughout each month that we have economic data being released that often has a clear impact on the price of silver. Today is one of them, and that's why we really look at the first 30 minutes of this data being dropped. Now, it was a little unusual this morning to see such a clear response within those 30 minutes. That's why myself and my friends at Offset Economics, we were talking this morning, and we decided to make this live stream a focus of this. Again, there's a link down below. Check my friends out at Offset Economics. They're awesome. You're really going to like them. They have their own YouTube channel. They just started it. You're going to like it. Now, here's an example. In July of 2020, silver surged more than $3 an ounce in a single trading session. That was following shifts in economic expectations. While today's movement about $1.50 within 30 minutes is smaller than that, it still represents a significant percentage move in a very short time frame. Moves of roughly 1.7% in less than a half hour indicate heightened uncertainty among traders. And if there's any word you're looking for to determine where the price of silver may be headed, it's that word, uncertainty. That is just fuel for silver. And it's really beyond, it's fuel beyond the idea of a safe haven asset, because particularly a sense of uncertainty that is going to be unresolved within the next 5 months, 6 months, year, something like a geopolitical issue in the Middle East, something like tariffs that are just rolling out, and their impacts will not really be seen, just like we just experienced the past 12 months. The impacts on tariffs were not fully seen until months later. That's a great example of uncertainty that is not going to be resolved anytime soon. And so these issues are a little bit different than gold. Everybody wants silver to follow gold immediately. Well, it doesn't necessarily work like that. There's a lag, and that lag could be big. It could be 3 months, it could be 6 months until silver really follows gold. And the reason is really that the use of silver in this safe haven asset world is a little different than gold. Central banks hoard gold. They have gold in their reserves. They don't use silver in that way. But silver does still, on its side, silver does respond clearly to uncertainty and heightened uncertainty and long-term unresolved uncertainty. That's always big for silver. So again, if you're new to this live stream, I host this live stream daily at 9 p.m. Eastern on Pound of Gold. And today's live stream, I'm giving a shout out to my friends at Offset Economics. They helped me with the research I'm presenting to you for today's topic. They have their own YouTube channel they just started. Check them out. They're great guys. There's a link I put down below in the description. Check out Offset Economics. I think you're going to like them a lot. They get straight to the point. They use AI avatars to get this information to you quickly. I really like these guys. Let's get to today's charts. Looking at the charts, we see 5 trading days took silver from an opening level of $95 to a close near $84. That's a drop of $11 or 11.5%. And that kind of move demands a closer look. Over those same 5 days, silver actually hit a high of $96.50 and a low of about $78. That means the market is swinging across an $18 range in less than 1 week. And that doesn't normally happen in a calm metal market, and it usually shows up only when silver is trading with far more emotion than actual logic. In this section of the live stream, I'm going to show you how silver went from 96 to the low 80s in just a week without ever establishing real stability. And I'm going to break that down and show you how each day built on the stress before it. And stick with me to see the pattern in this, because by the end of this live stream, in just about 7 minutes left in this live stream, I'm going to show you how this market can look stronger coming from Monday than we ever thought possible. Now, here's what almost nobody is noticing at the time of this live stream. It's Friday evening. It's 9 p.m. By the way, if you're new to this live stream, I host this live stream daily on Pound of Gold channel, 9 p.m. Eastern. Don't miss it. Now, when we look forward to Monday, we have to really understand this pattern that played out this week because it's so important and most people are not looking at it. So really lean into this part. Really, by the second day of the week, by Tuesday, that was the real shock to the system because silver, the spot price for silver, opened at about $89, opened at $89. It touched a high 91, and then it collapsed. Remember this, it went straight down to $77.09, basically $78. And then it leveled off around 82. And that's a one-day loss of 8%, more than 8%, really. That was the worst decline of the week. And it stretched the damage really from Monday into something much more serious. What analysts are saying is that the energy prices tied to the Middle East tensions were fueling inflation worries. That's what they're looking at. And the stronger dollars weighing down on precious metals. And silver came under much heavier pressure than gold would, which is actually quite typical for the initial response to a geopolitical issue, one that is clearly not going to find resolve in a short period of time. Because when silver falls from $91 to under 78 in one session, that tells you fear is no longer isolated to just one corner of the market. It's actually spreading across the entire trade. Now, at the top of this section of the live stream, I told you that I was going to show you how we could look at Monday and see how things are going to play out. Here's the math that we really have to understand. Because if you line up the 5 closings, $89, and then 82, 83, 82, 84, right? That's what we saw. You could really see the real story. Silver didn't trend smoothly lower all week. It actually broke hard, and it tried to stand up, stumbled a bit, and then it managed only a partial recovery. Now, with a partial recovery like that, what most people miss is that the number by the end of the week, it didn't mean that this week turned bullish. It meant that the market actually found a floor. It stopped falling fast. And those are not the same thing. It's not the same thing as being strictly bullish. A close of $84 after a week that started at 95, that still leaves silver down 11.5% across this 5-day stretch that we had. Now, here's where this gets important, because the full week range from 96 down to about $78, that shows really just how unstable silver can be over these 5 days. That $18.50 spread, or roughly 19% of the high. When markets swing nearly 1/5 of its value inside a week, did you hear that? 1/5 of its value in a week. Silver stackers like you and I, we need to stop looking only at the final day where we landed. And we need to look at the structure. This is what I've been talking about this past week on this live stream. If you're new to this live stream, please hit subscribe. Don't miss it. I host this live stream daily on Pound of Gold at 9 p.m. Eastern. Every day, I try to break down the silver market in regular language, no jargon. I try to explain this so everybody can understand and get a good sense of where silver might be headed. And right now, we're looking at Monday as the key point, because after, again, 5-day stretch here, and we have silver swinging basically 1/5 of its value inside that week, as silver stackers, we can't just look at that ending price. We have to look at the pattern that we saw through this week. And really what the pattern is telling us is, with the cup that we're coming out of, this could be showing us the handle that we've been waiting for. And if that's possible, if we have a week of this, of pressure from a stronger dollar and rising energy prices and inflation fear tied to this conflict in Iran, Israel, and the States, that combination, it really matters because it creates a strange split in the metal space. And normally, silver benefits more clearly from safe haven demand when fear rises. But this week, with the dollar strength and the broader market stress keeping silver from really acting like a crisis hedge, we see in this chart more of that handle in our chart, which is bullish, and it should be bullish because gold as the safe haven in a time of crisis does not have the industrial push that we have as silver bugs. You and I, silver stackers, we know that this metal is got the momentum of industry behind it. So a bit of strong dollar, some rising energy costs and inflation fears from the Middle East, that's not going to slow down the push and the demand that we have from the industry side of this metal. Gold doesn't have that. Now, what's being shouted from the rooftops is, why isn't silver following gold? After a week like this, why isn't silver doing what it's supposed to do? Well, really, it is doing what it's supposed to do. It takes this window of time. There's typically, it could be 2 months, it could be 3 months, at least, for silver to really follow gold. This is the window of time where we have that lag between investors presently today, at the time of this recording, making their moves. I'm talking about institutional players. I'm talking about big funds making their moves in the metals market. It won't hit our spot price as silver stackers Monday. It won't hit it Tuesday. It won't hit it next week. It could literally take that time. So when we look at Monday coming up, the first thing we really have to see is what kind of economic data is going to drop and impact silver beyond all of this uncertainty with inflation, with Middle East, and with a dollar. So it doesn't mean that after these 5 days, Monday morning opens up and we get silver shooting up. Now, the part that most silver stackers don't look at, and we really should, is the Asian opening on Sunday evening, because that is a real play that seasoned dealers look at. They don't wait till Monday morning. They check the silver price really starting Sunday afternoon, because that's when you could really see China has opened up their market. They're already making moves, and the spot price is already moving. They're not waiting for Monday morning. Well, check out the live stream daily here on Pound of Gold, 9 p.m. Eastern. Don't miss it. I'll be posting another live stream tomorrow at 9 p.m. and support our channel sponsor. Thank you, Money Miles Exchange, for having this contest. It's a great contest. If you have not already, click the link below, become part of that contest, and support our friends at Offset Economics. They really helped me a lot with this live stream today. They gave me a lot of support with the research that I needed for this live stream. Click that link. Check out their channel. They just started their own YouTube channel, Offset Economics. I think you're really going to like it. They're bite-sized. Their videos are short. They get right to the point. It's a lot of data. Shows you how silver is working. I really think you're going to get